But what really seems to be making all-time highs yet again has been the gold prices. The yellow metals price has breached the $3,700 per ounce mark after crossing 3,500 just 5 months ago. It has surged around 40% so far this year, and the rally comes on the back of weak dollar index, growing anticipation of a rate cut by the US Fed this week. The markets have priced in a 98% probability of a rate cut already. So where is gold headed? How much of it should you have in your portfolio? Joining us to discuss that is Feroze Azeez. He's joined CEO Anand Rathi Wealth Limited. Feroze, hi, good to have you. And, for the longest time when gold was trading at 2,500 and then 2,800, even then there was hesitancy amongst people. Since the time it's crossed 3,000 and 3,500, a lot of people have turned believers and buyers and advisors as well. Is it too late?
See, I think it depends on the outlook, Manisha. Like you rightly said, actually gold spent a lot of time below 2,000, 1,800 for almost about 6, 7 years in terms of dollars. Of course, the rupee values were appreciating because of the rupee depreciation over the last decade and a half. But once it broke the 2,000 levels, there's been no stopping it at all. And now today, like you rightly said, 3,700 has moved to almost about 3,500 to 700 in just a few months. So is it over? I personally think no. If you're replacing debt from gold, it is anytime a good time, in my belief, because beating debt I think, is going to be very easy for gold, given the fact that if you look at the total gold mined, 1,87,000, 1,90,000 tons. Treasuries or governments have about 36,000 tons, 36,000 tons, yeah. And if you look at how tonnage has been added, I think China added about 225 tons of gold in 23, calendar year 23. I think that's what broke the resistance. They were not, after that, they've done about 72 and 40 respectively in this year so far. So what has actually broken the resistance for gold is a new consumption which came from all the governments, especially during the geopolitical uncertainty, and the Russian sanctions really shook up some countries to see as dollar as the currency or the reserve currency. After 15 years, I think dollar is going to lose its sheen, and that's where gold is the only other replacement you can look at. So coming back to your question, do you think it's over? The answer is no. Can it deliver 10-12% return per annum? The answer is yes. Does debt give you 6-7% in India? The answer is yes. So if you're making twice more the money, but long term, it'll not beat equity. Today, also, if you look at ChatGPT and check the 5-year return on gold, it'll still be 13 to 14%.
I like the way you simply slid in that ChatGPT thing, Feroze. But the new consumption hasn't just come in from the central banks. Of course, they are the biggest buyers by far. But have you also seen new buyers get into this market, whether it's financial advisors, whether it is about institutional houses, family houses, corporates as well? Are they also adding gold into their kitty now?
Yes, see, if you look at the influx, see what the gold ETFs and the gold funds tell you the proxy of who's participating in gold. I think it has seen some momentum. Basically, if a family office is going to participate in gold, it's unlikely that they will go into the physical format of gold from an investment standpoint. Has the momentum picked up on a mutual fund platform? The answer is not so much. Is SEBI looking at relaxing the norms for an equity fund to own REIT and precious metal? The answer is yes. So because if there is relative valuation attractiveness for a fund manager who's got a discretion to manage thousands of crores, and if I tell him, if you don't like equity momentarily, you want to park it in gold, if you give them a larger canvas, then there could be a larger influx from their side. But I think the amounts are not so large so far because they don't participate in bars and coins. There has been jewelry demand of about 782 tons this year globally in terms of gold. That's almost the same pace for the last year so far.
Oh, absolutely. As you said, that the prices can go higher from here, 10 to 12% annum is what you're talking about. Is it overbought in the near term? Because we do understand that this is in cycles, and 25 seems to be like a very, very tall year. Highest gains perhaps in last 5 or 6 or 7 years for that matter when it comes to gold. But what is your sense on gold prices from here on? There are a lot of reports suggesting 4,000 by the end of this year, 6,000 by the time we are in 2028 or even 2030, depending on how those next 5 years play out.
Is Manisha, not just for gold, for any variable which gets traded or bought into, there are signs that the momentum is over before it is over. Is gold showing that today? The answer is no. When any variable for that matter creates a pattern such that gold has created over the last couple of years, it is not still showing signs of slowing down. So will gold reach 4,000? Quite likely. I would bet for it to go to 4,000 more than come back to 3,000 and languish there, because the momentum hasn't broken. And what happens is performance is chased. Globally, human beings chase performance. So before, if there is a lull of 4 months, 5 months, then probably it'll be easier to break the momentum. I think now the momentum can't be broken till it sees higher levels.
For the longest time, Feroze, it has been about holding 5 to 7 to 10% max of gold in your portfolio. Does that number seem to be changing?
To my mind, that number has not been my favorite number. My number has been half your debt. I consider debt as poison of a portfolio for long-term monies. Long-term monies, governments have marketed to us, have debt, safety, safety first. I think that is only to fund the government's fiscal deficit. If you look at 5-year monies, 10-year monies, debt is just like poison or smoking, like it is. It's injurious to health. It's not like poison that will kill you. But there's no point having long-term monies in debt. So one way to look at it is, if you have 30% of debt in your portfolio, I would not even worry to have 15% in gold. Half your debt allocation could be in gold.
All right. Gold is just one part of it. Feroze, I was discussing platinum before I came to you. I have been talking about silver as well, which has hit all-time highs, and it's given you 48-50% of return this year, and the best return really in 5 years, because it wasn't last in 2020 that we saw 42% of gains, again, in case of silver there. Are Indian investors at all looking at other commodities? Gold, I understand, is something people understand, and there are ways to buy it. But when it comes to other things like silver and a platinum and a copper, which has done quite well, and it's a 26-month highs that we are trading on zinc right now. I understand people buy equities for these, related stocks as well for these, but the underlying commodity, how far is it before people start accumulating this in a portfolio?
See, one is, when will they accumulate? I think people buy performance, like we said. And Manisha, you are the best judge in other commodities. But I'll tell you, if it has to come into the recommendation of a person who's mathematically making the portfolio, I would look at three numbers before I even consider a commodity an asset. Commodity transforming itself to an asset is the question. If I have to do a macro level paraphrasing of your question, gold has become an asset. It's a commodity, incidentally. Silver, so three numbers I see. I see 3-year rolling returns should be double digit. So gold 3-year rolling return for the last 10 years, if you bought gold on a particular day and sold it exactly 3 years from then, every day if you did this since 2014, the average return of those experiences, 3 years, it will be 10.14% compounded. So that's the first return you see. Now, the last 5 years, gold has been doing very well. So does it pass the first litmus test? Double-digit return. Great, gold does. Then I see what is the standard deviation. How much is the deviation on this 3-year rolling return? For gold, it is 6.81% standard deviation. Matlab, 10 plus 6, 10 minus 6. So that's the risk number. These are the two first numbers you have to see. Now, for the same numbers for silver, I'm throwing some light on silver because that's one asset or commodity been existing for quite some time. 8.62% is the rolling return 3-year from 2014 for silver, but the standard deviation is 9%, 8.42 to be precise. So silver has still not made the cut. And am I qualified to comment about platinum? Definitely not to you. You know much better than I would have ever.
I have one final question. So if somebody was making a newer portfolio at this point in time, how much gold are you advising them? And I'm not even going to the other commodities. Gold as an asset class, the way it seems to be standing right now, and everybody, and Feroze, you know, we speak to a lot of Indian and international guests as well. Almost everybody is putting their neck out and saying that, yes, I own gold. I'm going to be holding gold, whether it's about gold, gold stocks, mining stocks, yes, whichever way you can delve into it and hold it for a longer term.
See, Manisha, gold, if somebody told me you have to have gold as an asset class, even if you don't have debt, then I will definitely put 10%. Second, I personally think this whole argument that you can buy gold mining stocks and play gold is a non-mathematical argument. I tried this. There was a DSP World Gold Fund. which was supposed to buy fund stocks which were going to benefit from gold rally. The kind of correlation those stocks have with gold, if you mathematically put it on an Excel sheet, it'll shock you. There were stocks with negative correlation with gold price. Gold in that period where I was evaluating a certain fund, which is called the DSP World Gold Fund went down 30%, gold went up 20%. So don't buy this obvious English argument, is what I tell your viewers. Check the correlation of gold price with the underlying stock you're buying. And there are very easy methods to check correlation. If you don't see positive correlation of greater than 0.5 using an Excel sheet, don't even assume that this hypothesis is true, that you can play gold using stocks in gold business.
Feroze Azeez, always a pleasure talking to you. Actually make us see the mirror there. And of course, it doesn't always sound so gold and glittery when you look at those returns for various derivatives there. But thank you so much for joining in and making sense of what and what not to watch out for when it comes to this asset class. Always a pleasure. On that note, it's time for a break, but don't go anywhere because the discussion continues when we return.